Let's talk about trading. What if it didn't have to be this chaotic, stressful game of chance? What if you could actually transform it from something that keeps you up at night into a structured, calm, and, most importantly, repeatable business? Well, today, we're diving into a philosophy that's designed to do exactly that. This is what's at the very core of the Zen Trading server.
But before we go any further, we have to ask a really direct question, one that gets right to the heart of it all. Are you actually trading, or are you just gambling with fancier charts? Seriously, the answer to that question changes absolutely everything.
On the surface, they can look pretty similar, right? You're risking money, hoping to make more. But the real difference, the critical one, it isn't about luck. It all comes down to three things: process, skill, and management. This is the bright, shining line between a professional operation and just, a trip to Vegas.
And this chart, it just lays it out perfectly. A pro trader makes decisions based on strategy and real analysis. A gambler, they're running on emotion and hope. But look at risk management. This is the big one. A trader actively controls how much they can lose, with a stop loss. A gambler just throws their entire stake on the table and hopes for the best. And over time, a trader's skill gives them what's called a positive expectancy, which just means they're set up for long-term profit. The gambler, well, they're always up against the house, and we all know the house always wins.
Okay, and this is where it gets a little personal, because anyone can slip up and turn trading into gambling. Think about it. If you're jumping into a trade because of FOMO from some hot tip, if you're conveniently forgetting to set a stop loss, or if you're trying to revenge trade to make back money you just lost, you're not trading anymore. You've officially crossed that line. You might as well be pulling the lever on a slot machine.
So the big question is, how do you make sure you stay on the right side of that line? Well, it takes a huge philosophical shift. You have to stop thinking of trading as a hobby or some exciting game and start treating it like what it should be, a serious business.
And this slide just illustrates that mindset shift perfectly. A business owner, they analyze data. They manage their inventory. And in trading, your capital is your inventory. They control risk because they want to be around for the long haul. They're looking for consistent, steady profit. The gambler, on the other hand, is just hoping for that one big jackpot, going all in on a gut feeling and really just chasing the thrill. So which one do you think is built to last? Now, the absolute foundation of any real trading business is this one simple concept: an edge. So what is an edge? It's just a statistical advantage. For example, maybe you notice that a certain stock goes up 70% of the time right after a specific type of news comes out. That's an edge. It's a specific, repeatable pattern that gives you a better-than-random chance of success. If you don't have an edge, you don't have a business. You're just guessing.
Okay, so if trading is a business, then how do you actually run it day to day? You need a playbook, an operating manual. And this is where the campaign playbook comes in. It's a structured, methodical way to execute your trades. The main idea behind campaign trading is to stop treating your trades like you're at a fast food drive-thru, in and out in 2 minutes. Instead, you treat every single position like a long-term, military-style campaign. It has different phases, it has clear objectives, and it requires real strategy, not just a quick trigger finger. And this isn't just random buying and selling. It's a very careful, structured process. First, you have preparation, or scouting. You're picking your battlegrounds, building your list of targets. Then comes accumulation, where you build your position gradually in smart areas. You don't just ape in. As the trade starts to work, you move into the markup phase, advancing your position by adding to a winner. Then, as everyone else gets euphoric and piles in, you begin distribution, methodically harvesting your profits. And finally, you execute a clean retreat in the markdown phase, closing the campaign and protecting that capital for the next one.
This whole practical, business-like approach is incredibly powerful. But let's be real. To actually pull it off, especially when the market is going crazy, you need a really strong mental framework to keep it all together. And that framework? That's the Zen philosophy. It all kicks off with this one crucial idea. Profit is not a goal, it is a byproduct. Think about that. If you chase profit directly, you're going to make emotional mistakes. Instead, you have to focus on the things that create profit in the first place.
This chart shows you exactly what that means. See, profit isn't something you go out and hunt down. It's the natural result that just appears right there in the center when 4 other essential forces are in perfect balance. It's simply the outcome of a well-run system.
So what are these 4 forces? Well, first, you have time. Spending time in the market teaches you its natural rhythm and cycles.
Then there's knowledge, which lets you actually understand what you're seeing. Third is process, like that campaign playbook we talked about, which gives you a repeatable structure. And finally, there's patience, which is the discipline to let your plan unfold without freaking out. When you get those four in harmony, profit just follows.
Now, philosophy is great and all, but how do you actually apply it every single day? Well, this whole system is built on a set of rules that turn these big ideas into concrete actions. And these aren't just gentle suggestions, they're the guardrails that ensure discipline within the Zen trading community.
The first and honestly, the most important rule of them all is this: process over outcome. This right here is the absolute bedrock of professional trading and the very heart of the entire Zen philosophy.
Let me break it down. You can do everything right, follow your plan to the letter, and still lose a trade. That was a good trade. On the flip side, you can make a terrible, impulsive decision and get lucky with a win. That was a bad trade. The focus has to always be on the quality of your decision-making process, because that is the only thing in this whole game that you can actually control.
All right, the next rule is just as critical, and it's a direct attack on that gambling impulse we talked about. Patience is non-negotiable, and there's zero room for compromise on this one.
What this means in practice is you don't trade just because you're bored. You don't chase a stock that's already taken off. And you certainly don't ask a bunch of strangers if you should buy or sell right now. You wait for your specific setup, your statistical edge to show up. And if it doesn't, you do nothing. You have to understand patience is an active skill, not just passively waiting around.
And really, all of this, the business mindset, the campaign playbook, the core philosophies of process and patience, it can all be boiled down to this one simple but really powerful mantra: trade calm, trade prepared, trade with intent.
So, as we wrap this up, I want to leave you with the same question we started with, but maybe framed a little differently. Take a hard look at your own approach to the markets. Is it truly built on a repeatable, disciplined process? Or, if you're being totally honest with yourself, is it built on hope? The answer to that will define your entire future as a trader.